Hello guys, welcome back to a new YouTube video. So Luke here from Zeus Capital as always. Now in this video, what I'm going to do, I'm going to just show you guys how to map out your market structure, identify those highs and lows. And it's a very simple method that I've come up with, via back testing, and it's just very consistent. So I thought I'd share it with you guys. I will attach probably some files in the description below and some general links as well to some things I recommend. Some are affiliate links, some are not. But yeah, without further ado, let's jump into it. So when it comes to mapping out highs and lows, it's actually fairly simple, right? It doesn't need to be an extreme long video, because it does simplify everything, right? So let's just say we have let me just make this straight and I'll do like so. So if I just turn that down a little bit, there we go. So pretty much what we're looking at here is, if we just take a look, let me just touch some more. So if we take a look here, right, I want you to look at this and think, what is the high and low? Now you probably think, oh, okay, this is the high, well, that's the low, sorry, and this is the high, right? But actually this is the high and this is the low. Now the reason for this is because it's got to have at least, it contains 3 candles, okay? So if you see the middle candle with a higher wick and, a bullish example to mark out the high, you would need the 2 candles, one on the left to it and one on the right to it, for the wick high to be lower than this middle wick high. And obviously vice versa for the bottom of the range, in a bearish market, whatever. It's the same for identifying the pullback. So if price comes down, creates 3 candles, right, like so, the one with the lowest wick out of those 3 candles would be your low, and then you go back and identify the high as well. So what I'll do is I'll walk you guys through the price chart as well. We'll just start off somewhere random, so let's just start off here. So if we just draw out 2 lines, I'll do right now. If we just go forward, actually this here would be a high, this here would be a low, okay? Price broke structure here, we now have a new high, which would be this high here, because obviously the candles next to it, the wick highs are lower. And then in terms of lows, we'll go back in time and it'd be the same low down here, right? So obviously if we were going to break bearish, we'd need to see a break below this low. So if we just put that as a chalk, all right, we now have this low here. Obviously we broke here, price starts to pull back those 3 candles, and we have a high. So right, this here is not a break of structure. If anything, that's just liquidity. So let's go ahead and mark that as liquidity. This here broke structure down here, because obviously the candle closures on this specific time frame is obviously a break structure. You go follow the 3 candles. This is a tricky situation here, so you can always just zoom out to the line chart and see if there's anything there. But I'm just going to mark this as my low, then go back in time, and this would be the same high up here. And obviously broke structure, so we come down here, the low, we go back, that's the high here. So obviously that wick high is above these candles to the left and right. So as you can see, price broke structure here, we have now formed a new low. We go back in time, that would be the high here. As you can see, price flipped bullish as we broke structure above here, so that'd be a chalk. We now cancel this one, and as you can see here, we have this wick high, broke structure here. We go back in time, so that'd be the low here. Right, this up here is the new high because we broke structure. We now have a new low as well, which is here. We then chuck to the downside, but what I'll do is this. Then obviously we have this low here. Go back. Didn't break structure to the downside, but we chucked. No, we didn't even chuck back to the upside. Yes, we did here. Okay, so the break structure was here. So it could just be like you can look back on this and see where price actually tapped into. Usually, if it did tap into an order block or a valid supply demand zone, then it is the pullbacks. Obviously, well, it's not really a chalk. It's just sweeping liquidity and tapping into previous order. So that's a chalk, and we have this is our high. This is our low. Broke structure downside, so that'd be a chalk. Got a new low there. New high up here. New low, high, break structure, low. And what I'd recommend you guys do as well, when you come to back test this and use it, you may not include these as your lows, as it could just be like a sort of, I don't know, like a continuation order block, sort of a fake sort of pullback. So you can start to look at things and think, okay, if it pulls back with a certain amount of pips, well then it'd be a valid pullback. Like for example, this is 48 pips. What I usually look for is 40 pips on the H4, so we can turn it off that 4 number. So that probably would be a valid sort of pullback for me personally. But that's something you want to check out, you know, guys, you should definitely check out. But yeah, you know, you probably get the idea of it now. It is fairly simple. You don't need to overcomplicate it. You know, it's just how I map out market structure, and to be honest, this is a great way of trading. You know, it just simplifies everything. Oh, excuse me, dropped my phone. It will get a little bit confusing sometimes as well, so just don't get pissed off with yourself. That one high there. High. Low. Okay, so what I've done is that is pound dollar for H4 chart. I've just gone over the chart with you guys, you know, with a complete walkthrough. What I'll either do is now put some pictures on the screen, or leave a link down in the description below to a certain you know, image, which will help you sort of understand what I'm saying in you know, in clarity. It's just in a picture, I guess. But yeah, you know, that's pretty much it. Like I said, this is how I map out market structure. So now usually what you would usually do is, you know, go and map out, you know, the zones and, you know, the most extreme point, whatever, however you do it, you know, blah blah, you know, you got all this, like this, for example, this zone here, you know, so you can go drop to low time frame, repeat the same process with the new high and lows on a 15-minute, you know, from this 4-hour zone, and look for a 15-minute confirmation entry, and then a 1-minute confirmation entry after 15-minute zone, like create a D, you know, chalk or whatever, right? So yeah, you know, it's just a great way. Sometimes, like I said, you know, price won't always pull back, but this is how you adapt with the markets. You know, if you want to adapt with the markets, let's say, for example, you have a zone up here, but price break structure here, well, we'd have a new POI. We'd have a new POI up here, POI up here probably, and a new POI here. So you just keep adapting to the ranges. Obviously, if it gets too low in, you know, price, and you just flip out to the daily, let's say, you know, you probably see like this here is just a pullback to tap into like a daily zone. You know, so the H4 is sort of counter trend, sort of short term. But yeah, you know, that's what you guys should just do now, is just go on the charts and just literally put it to work. And yeah, if you want to get access to our courses, our 0 to 100 program is literally around the corner. I'm looking to release that very, very soon. It'll be out by the end of this month in March 2022. But yeah, if you want to get access to it, it's going to literally take you from 0 to 100. It's literally in the word itself. So yeah, come get early access. If you want a discount code as well, if you've reached it this far and you're still listening, make sure you just drop me a message. You know, I've always got you back. So yeah, appreciate you guys watching, and catch you on the next one. Thank you guys.